All right, good morning, everyone. We are back for Fractional Friday. Probably every other week, every other week we'll try to do this. I got Joseph Cacciapali here. So, what's up, man? How's it going?
Pretty good. How are you?
Good, good. And you are a new member of the school community, so it seems like you're enjoying that, having a lot of fun there. But why don't we kind of catch up and dig into kind of what we've been working on, looking over deals and platforms that you are involved in. So,
Yeah, absolutely. So, last week, or not last week, but a couple weeks ago, last time we did this, I went over Lofty as a platform, which I think is probably, I don't know, I probably made a bad decision there. It's probably the most complicated platform for fractional real estate. It's just the one I spend the most time on. Today, I'm going to share with you a platform called Mogul. Um, I think there's a lot of reasons for someone starting out in fractional real estate to maybe want to go in that direction. I'm going to say lots of nice things about them because at the moment they're my favorite platform. So I want to give the disclaimer up front. Do your own due diligence on them. It's perfectly possible that I've been duped and they're not as amazing as they seem to be. That's happened a lot of times with these fractional platforms. You get a new one, they come out, they've got what sounds great, but really always want to dig into each deal yourself. And I'm going to, hopefully share some info on them that is helpful.
cool. While you're getting that set up, I just want to remind everyone, go check out Joseph's YouTube channel. He also does a lot of breakdowns on his channel on the fractional real estate side and the platforms and deals he's looking at. So go check out the chat, go subscribe. And also for those that haven't yet purchased their PayPal or their ORAT shirt, Frank's PayPal link that he's donating money to the Blind Center where the event will be held at in February. But yeah, go check that out, everyone. And here we go. Let's see.
All right. So I'm trying to share my screen with I know last time I kind of messed this up. I've got my phone going so I can see
Okay.
it, but there's a little delay on it.
That's okay. That's what we're here. We're gonna go live. There's a little bit more challenges going on, but I
Right.
think people enjoy their lives a lot more. So
Okay. So you can see the platform where I'm just on the page with several properties showing, right?
yep. Yep, I see the Ven, the rat lift. I see. Yep.
Yeah, absolutely. Okay, so this platform, so I'm going to sort of juxtapose it with Lofty, or compare it to give you a different idea. So Lofty that we talked about last time, it's an exchange, right? It's a marketplace. Anybody can bring a property to it and then sell equity on there. This one's quite a bit different. It is two guys that came from Goldman Sachs. They worked in the real estate group, and I don't know exactly what their roles were, but they at least one of the two, his main job was to find residential investment properties for one of their funds, and so he's very sharp, and it's him and his team that picks every one of these properties. So it's one of the reasons I like this platform a lot. On average, the deals are significantly better than most of the other platforms. I'd say, where I might pick one out of every 20 or 30 deals I look at on Lofty, I've bought, I think 11 out of the last 16 that they've put out on Mogul. So, about 2/3 of them I'm pretty happy with. And, some of those I'm just buying a little piece of, some of I'm putting a little bit more. Um, but overall, the quality of their deals, I think, is significantly better than really any of the other platforms I'm familiar with at the moment. Um, they are a little bit different. So they're using blockchain technology similarly to how Lofty is, except that it's hidden, right? Like I bought properties on here before I even realized that's what they're doing. They're just using the smart contracts in the background to keep track of ownership stakes. um you can actually buy into these properties with crypto, but you can also just be an old guy like me who has no crypto knowledge and come on here and buy stuff and have no problem whatsoever. um I think I've been investing with on this platform since December, so not a ton of time. One of the things I think, whenever we talk about a new platform, one thing I think will be important is to talk about like where they stand as far as, is this a security? Is it, what's the interest you're actually buying? Um, and because a lot of the platforms are trying to fit into some loophole or safe harbor to where they don't have to register the interest that you're buying as a security, and they're doing that because it makes it much more expensive once you have to do that. And so on here, they have each investment set up as what's called an investment club. This is something that's been around for a long time, but they're, that's the sandbox they're trying to play in. Um, Obviously, I'm not a securities lawyer. I have no idea if this is going to hold up long term or if these will eventually be deemed to be stocks. But they seem to be very smart guys and have paid the right people to tell them how to set this up in the way that they need to. Uh, One of the things when you do buy on here, it is true ownership in these properties. Meaning you get some portion of the rent, and when it sells, you'll get paid out there, and you get a K1 for each property. So one thing that I realized or didn't realize early on, the minimum investment on this platform is only $250. But if you make the minimum investment and that's all you make on each deal, when you get your tax forms done at the end of the year, depending on what your CPA charges you per K1, it might not make a lot of sense financially to do that. I'll be honest, I bought little pieces of a couple of these deals before I really thought that through, and so we'll see what happens when tax time comes. Uh, so
That's
what?
great advice, though. Yeah, I would have never thought of that too.
Well, it really only dawned on me once I was dealing with taxes on some of the ones I started investing in last year. I bought my first property on Mogul in December, but I didn't get a payout until January, so I didn't have to deal with it yet. But yeah, it is. That's one of the things I think all of these platforms that are not, if it's not a security, they're the way that they have to address the taxes is going to, like, Lofty's tax forms this year were a mess, and I think they're trying to fix them for next year. But it's a growing industry. I think there is, I'm only playing here because I think there's a lot of potential going forward, but there's a lot of these little kinks that I think need to be worked out before I'm going to dump my whole net worth onto one of these platforms, right? But what I was hoping to do today is their most recent deal, this one called the Ven. I figured I'd go into it, do a little bit of, show you a little bit of the due diligence I like to do on the platform and off platform. But then also too, I've already dug into this one quite a bit. I'm planning to buy some. So I'd show you just how easy that works as well.
So between Mogul and then the other week you showed Lofty, right?
Mm-hmm.
Between those two, which one would probably be the easier setup or to initially get started on?
100% Mogul is easier. It is one, you don't have to sift through as many just bad deals. It's a much more straightforward the way at least, especially if you have any real estate experience. I'll show you how they present their numbers. They're going to look a lot more. They are very salesy. I don't know if you saw that pop up. But the way they present their numbers make a lot more sense to somebody who has any sort of real estate understanding. And it is. I mean, but the trade off is, even though I'm very happy with their returns, they're not nearly as, it's a more efficient market. So you're not getting these like ridiculously high returns that I can get sometimes on Lofty. So. But yeah, as a beginner, if I were somebody who didn't have a ton of real estate experience and wanted to, find one place to experiment with, this is the place I'm telling, most of my friends, like, hey, check this one out first. And I think for good reason. I mean, I just, like I said, I've bought probably or around 2/3 of the properties I've seen them list. And it's because they, on average are putting out pretty good deals. A couple of things one of the things that's a little bit confusing is they have the properties tab and then they have an analysis tab. And so you have to look at both when you're looking at the properties. I just switched tabs. Is that happening in real time for you? Because it seems like a delay when I look at it on the screen.
I see it now. Yeah, so now I
Okay.
see 4244 Dorsey.
Yep. And so then I click back and it's the same property, but it just says the VEN.
Yeah.
Okay, cool. So this is like the listing page where you buy it from, and then the one with the address is their analysis page. This is one thing that's really cool about their platform. If you just open up their analysis tab by itself, you can put any address you want in here and use their calculator to analyze any property at all. Um, if you're going to do that, you want to really understand some of the assumptions built into it. But it's a really nice free calculator. And so I'm going to scroll through just sort of the outputs. You can adjust your monthly rent, your taxes, all that stuff. Now, for any of the properties they have listed, they've gone through and put their assumptions into here. And you can model a refinance or not have a refinance. You put all your debt assumptions for your original loan and your refinance loan. You put growth assumptions and everything, and then it gives you real nice financials that look like what I'm used to seeing when I look at a typical real estate investment um, but this is where I think they're really excelling, right? Like this deal, their levered cash on cash yield year one is 10.21%, right? This is your basically your cash on cash return. Um, for a product that is just completely passive. Um, I think it's really hard to. I think it's hard to hit this number when you're just going out and looking for deals in general, right? Where I have no involvement, I'm not doing any work, and they pretty consistently are hitting these, low double digit cash on cash yields. And so this platform, unlike Lofty, the entity that you're buying into already owns the property. This platform, this property is currently under contract, so you can look and pull up the purchase agreement, see what they're paying for it, um, and uh, so these are projections, right? But one of the things that they're doing that I like a lot that they're doing is they're only buying properties like this is. Oh, and I should tell you a little bit about this property. It's a pad split. It's a co-living property. 6 bedrooms, 3 baths. At some point in time, it was configured as 8. It looks like if you look at older listings, but they have it as 6 at the moment. But it's been operating for a while as a pad split, and they have in place financials and their projections for year one. They're actually projecting they're very conservative when they do their cash on cash projections, at least for the most part, is they're using a number that's lower than the trailing 12 number. So that 10.21% levered cash on cash yield they should actually beat that if they can just maintain last year's performance. Um, and now, I think the reason they do it is when you have a turnover, you're going to have, you might have some hiccups, and you might lose some people. And, I understand they're being conservative there. But I like it a lot. This is why I wanted to switch back to this tab though. This is where and it is a little confusing having the two tabs. I think they're still working on their user interface a little bit. Um, but if I want to look at like their purchase price, so this property, they're purchasing it $360,000 using debt. They always use interest only debt. They had one of their webinars where they had a really good discussion on why. It's actually I like the strategy as long as you have good debt coverage. Uh, because what they're trying to do is avoid lazy equity. I don't know if that's something you want to get into or not, but I think the interest only, it's a good tool, especially in the market like we're in today. Um, but anyway, so one of the things you can see, they fund very large reserves, right? I mean, so this is just a single family home, and between closing costs and reserves, we have over $76,000 set aside for this, right? I mean, probably less than 10K of that's going to be closing costs, and so they fund very healthy reserves.
Is
They do
that
charge. Oh, go ahead.
Yeah, no. So that platform fee you were gonna just touch on, is that kind of it's a set amount, or is it like a
So
percentage of the purchase
So
price? Or
Mogul, Yep, Mogul makes money in two ways. At the moment, they have a platform. This is a one-time fee, which is 5%. It's actually broken up into a 3 and a 2 that they have for different reasons. And their notes all say sometime in the future the 2 is going to go away, and so this platform fee will actually get a little bit lower. So they have that, and then they also charge 2.5% of gross income. Um, but they've negotiated such good property management rates that 2.5% of gross income, like when you add it to what we're paying the property managers, it ends up being like it's almost non-existent. But so because they have that good discount, which you could have negotiated on your own, but maybe wouldn't have without the scale that they have. But so all of their analysis that they do, it's already taking into account this 5% platform fee. It's already taking into account the money they're taking out of your top line. And this is why I like them a lot, right? They don't have anything hidden. The closest thing to a hidden fee that they have is when I go through to buy this later, I'm going to end up paying like a $3.99 ACH fee. If you put crypto on, then you pay no fee, right? If you pay that way. But that is that's one big difference from Lofty is they basically are baking all of the expenses created by them into the deal itself. And because they're finding what I think are such great deals, they're able to handle all that and still pay a good yield. On top, even though like it's really hard to fund a big reserve and still have a good cash on cash when you're taking that into consideration, right? um and they're looking all over the country. They've identified a couple different markets, and this one, they found quite a few here in Georgia. So one thing I like to give you any sort of criticism that I can about these platforms. One is I really hate that they provide this average yield number. um, they're saying, okay, it's like your cash on cash return, but you're looking at your full 10-year holding period, and then we're taking the average of it. That to me is just a stupid metric. Like, because if you have really high later year numbers, those get averaged in just like your early numbers. So like I really wish they would just give us year one cash on cash and then annual, and then your IRR here. But I mean, that's just me being nitpicky. um the other thing that I don't love about this platform is that we don't get access to the appraisals prior to being able to invest, because this deal is under contract right now, and anybody can log in and look at these properties. They've just made the decision that they don't want to share that info, just in case the party on the other side, like if they bought a deal, this doesn't come up too often, but sometimes, you get a great appraisal. You don't want the seller to know that, just in case we have some further negotiations to do. You don't want them to have that leverage, right? So I understand why they're doing it, but it's something I don't love, right? I don't love having to buy without seeing it. But they do have an appraisal contingency in every contract, and they have committed to saying that they never will close on one that doesn't appraise for the full contract price. Um, One of the things, uh, they've just built up some trust with me over time, right? Like the properties that I have bought have performed the way that they've told me. Again, it's only about 6 months of performance, so who knows what happens in the future. But I think that they're doing, I think that the way that they do a lot of stuff has earned some additional trust versus some of the other platforms where I just really question everything. That being said, I don't take all of this stuff at face value. Um, One thing, I'm always still going out to like third party websites like Zillow, seeing what this estimate is. Okay, we have this one under contract for 360,000. Zillow says it's 359 700. That makes me feel pretty good about it. Obviously, we're not getting a screaming deal on from an equity perspective, but from a yield perspective, this is one that's doing real well. It was listed at 365. So this was a property that was on the MLS. It wasn't on very long. I think we got it on. It's under contract at 360, and then there is I think a 5K seller concession. It's all in the docs. I'm trying to not pull up too many things because my computer starts to hate me when I open, when I switch tabs too much when we're doing these. But so, this is one thing that I'm doing every single time. If it depending on what type of rent, of strategy it is, like this is a rent by the room co-living. So it's pretty hard to verify the income piece on this, right? Um, One thing I'm often doing is pulling up the pad split website and like digging around to try to find nearby pad splits and what they're renting for. I did that for this. I find that site really messes with the screen recording for whatever reason. So I didn't keep that tab up for this process.
Okay,
Um,
let's take a quick pause though. We got some questions here. So
yeah, great. See,
yeah,
I don't mean to monologue. So
no. Yeah, so we got some say good morning to everyone. We got Flavio's here, we got Jason, Josh Burdick, but Harrison's also here. He's also in the Discord channel for the fractional real estate. So I'll put the Discord link if anyone also wants to join that. But Harrison is asking which platform cashes out easier. So I guess maybe between Lofty and Mogul that you were mentioning so far.
okay, so that's definitely a downside to Mogul at the moment. When you're buying this, you have to think of it as buying real estate. You're not getting paid. You're getting paid as far as your rental amount, but you're not getting paid. Your cash. You can't sell your stake here at the moment, right? So until the property sells in real life, you're not getting that money. The lump sum at the end. They have said that that's part of their, something they're working on for next year to be able to sell out. But yeah, at the moment, if you need something with some liquidity, Lofty is definitely the better one for that right now. Um, Lofty, you can sell your interest instantly and get it in crypto, send it over to, like, what I do is send it to Coinbase and I can cash out, within a day. Um, but one of the things with Lofty, it looks like, oh, we have great liquidity over there, but you don't really, because if you start to sell too many tokens at a time, which is how their interests are set up as in property tokens, um, you can, like, individually, and this has happened to me when I've wanted to sell some, is you can tank the price, the token price, just by selling, a couple $1,000s worth of a certain property will tank the token price because it's such a thin market. So even though it is more liquid, it's still, neither of them give you pure liquidity. Like, so I have one property on Lofty. I've owned about maybe $12,000 worth of it. And I was just experimenting to see, like, okay, what if I wanted to sell it all today? And if I did that, it tanked it so bad that I'd only be able to cash out $4,000. Um, so I'd lose 2/3 of the value trying to liquidate it today. But again, I mean, I think this is a real estate investment. You should never be buying this with the thought that I'm going to liquidate it today, right? Like, I mean, you never buy a house that way. You never buy a property in real life that way. So I don't hold that against them too badly, but I think sometimes I do think that platform oversells the liquidity. They're like, oh, instant liquidity, sell your stake, tomorrow or in a second. It's like, well, yeah, if I want to, like, I think I could sell the home I'm living in right now today if I'm willing to take a 66% haircut,
Yeah.
but at the same time, if you structure your sales on there over time, you could, depending on how much activity there is in a certain token, you might be able to get out of it without getting too hurt over the course of a couple weeks or something, depending on how big of a stake you have. Um, but on Mogul at the moment, yeah, you're invested until this property is sold, or until they come up with that secondary market that they've said they're going to have. And so far, I mean, they've been really quick to roll out. They've made several changes that I've requested or other people in my Discord group have requested. I think that they are really listening to their customers right now, and I think they understand, like, where, it seems like they have a good understanding of where they need to go. So when they say they're going to have that, I believe it, but I wouldn't put money on here counting on it, right? Like, there's definitely a chance it doesn't happen next year. Maybe there's technical issues, maybe who knows what it is. um but it's certainly something they have in their plans at the moment.
All right, so we also have DL tuning in from your channel, I believe, and I want to remind everyone watching from my side, Joseph does also have his own YouTube channel, which he probably puts out daily content on the fractional real estate. So if you want more information on that, I would go subscribe to his channel. But DL says, on another video on Mogul, you mentioned in passing the concept of waiting to purchase would lead to higher XIRR as the amount of time would be greatly reduced. Does this still pan out still?
Oh, yes. So that's a good point. So these properties are under contract, right? And some of them, the contract time is pretty long. Like, so for example, this property, the Johnson 2, has been under contract for maybe 3 or 4 months. If you, maybe not that long, maybe 3 months, I don't know. But because they're raising like $1 million for the down payment, it takes longer for for them to raise all that. So they get a long contract period to do so. Most of these, a lot of these are buying off market, which is why they're able to negotiate these real long term closes. Um, but so until it actually closes, you don't get paid any rent, right? You don't get paid any sort of cash flow until it closes, and then there's a month of operation, and then you start getting your dividends. Well, if I had put my money into the Johnson 2 3 months ago, I'd have 3 months of no cash on cash return. And so, what I think is more of a best practice is to, so it's tough because some of them sell out really quick. Like if it's a great deal, some of these are selling out the full equity raise in 2 or 3 days, or if it's a smaller deal too, right? Like I mean, have been up for a while. Like I put money into the Celeste before this really occurred to me, and so it's probably been sitting there for 2 months without any yield. Now that's not the end of the world, but it's certainly impacting your total return over time, right? If I'm starting to get some right away versus waiting 2 or 3 or 4 months. And so I think this comes into play the most with ones like this that might have, sometimes it's 3, 4, 5 months that we're waiting to close on it, and then you have another month before you start getting paid. So yeah, I have started to wait and invest later. Like as it's getting closer to closing or closer to where I think, oh, that's going to sell out, and I want to get into it now.
Okay. Now we have Josh asking, so how would you answer this for someone like Josh who says, so this platform is just to passively partner on properties?
This one is very much passive. There will be certain decisions that when they come up, we'll have to vote on, like when there's a refinance or when we're going to sell it. They have to do that to comply with the investment club rules, is my understanding. But yes, I mean, like I'm collecting income from the ones that I've bought already. I'm doing absolutely nothing to do that, right? I mean, it is for me, the work on this platform is the due diligence, right? Like I make every time a property comes up, I don't just take their word for it. I dig into the value and the income and the market and checking the flood map and the crime map. A couple of them that I've passed on, for a number of different reasons. But yeah, I think you do the work up front, you pick the properties that make sense, and then yeah, you're just along for the ride. I mean, they're using a third party property manager, and then they're basically acting as the asset manager, making most of the decisions. And it is really just the big decisions, like are we going to refinance this, are we going to sell it? That's when there is some actual voting, and so you have some control. It's not completely passive at that point. But yeah, it's a very passive vehicle. This I like to call most of fractional, well, all of fractional real estate that I'm involved in. It's what I like to call couch money, right? Like you have to do some work. It's not necessarily you're not doing anything, because I'm doing the work up front, especially in some of the platforms. You have to stay a little bit involved with voting or proposals or whatnot, but you never have to get off the couch. You never have to talk to anybody. It is as close to passive as I think real estate can get.
I think we touched on it also the last episode. Is it's also a good way to maybe evaluate deals and run your numbers and kind of see what type of returns, and you don't have to invest like you're saying, you don't need this 20K 40K down payment to kind of evaluate or see how the property is running, right?
Right. I mean, that's the thing. Like, so, I mean, I think I mentioned last time, like I have across 5 different platforms I'm experimenting with. I have less than 100K total that I've put to work, and I have, you know, 40 to 50 properties, and yeah, I had over 100 mortgages because, we'll talk on some other time about fractional mortgages or a thing too. But you're able to get real wide diversification, get pieces of lots of deals. But like one of the things too, I think if you spend the time and you look at the deals on this site and you compare them to the deals on the average deal on Lofty, you start to really see where some of the traps are in real estate, right? Like you can see, like these guys that are picking these deals, they really understand. Um, you're not going to have. They really understand how to pick a market. They understand. You don't have any of the traps where, like, a lot of the ones on Lofty struggle because the rental rate is too low, right? Like you could pay $50,000 for a property and have a $500 rent, and you think, oh, that's a good rent to price ratio, right? I'm getting my 1% rule. But it's virtually impossible to make a property profitable with $500 a month rents, because the first time you change a hot water heater, you just lost 2 months of rent or 3 months of rent. Like, um, so there's these sort of traps that you see. A lot of the properties that got brought onto Lofty were ones that, sort of newer investors that don't know about a lot of this stuff. They, on the surface, those numbers look good, right? Like, oh, that's a lot of rent for the price I'm paying. Not understanding that, okay, the first time you have a turnover, you might lose a year of rent. Like it's not inconceivable that if you had a tenant really rough on your unit, that you're spending $5 or $6,000, and then that's literally, your whole year of rent, on one turnover. So I think you can really get to see those things play out across different properties, and I think that's what, when you see these ones, they don't have anything that doesn't, they're, well, almost everything. I think everything they're doing right now on Mogul is either a short-term rental or a co-living, because they understand that in the markets that, at least that I'd want to be in, you need a different type of strategy today to have a decent cash on cash return, or even to be able to pay the high interest rates today, right? Like, I mean, there's most markets that I want to be in, you can't buy a long-term rental and have it make a lot of sense with the price of debt today. I mean, unless you're getting some fantastic discount from the market, it's, most of the time you're struggling in, at least in any of the higher growth markets that you want to be in.
So I'm going to skip over a few questions. We'll go maybe to a part two of kind of what Josh was asking. So he'll say,
Okay.
is this like a REIT app then?
It's not a REIT. And so that's a good question, and it comes up a lot. So the thing that makes me interested in this versus a REIT is, when I buy a REIT, I'm buying into basically a blind pool of properties. Like, I might be able to see their current portfolio, but I have no control over if they sell stuff and buy new properties. It's very difficult to do due diligence and really understand the value of your investment. And I actually, early in my career, I worked for two different public REITs. My very first two jobs in real estate were as an analyst at public REITs. And one of the things that you have with a REIT is you have a huge layer of expense. I mean, we had nice offices, they paid lots of staff. You're not getting true access to the deal itself. You're buying into a pool, and you have this layer of fees and expenses. Um, and it's, the reason that I really like fractional real estate compared to a REIT is that I can look at, I'm investing in this home. I can do due diligence on this home. I can understand what it's worth in real life. I can understand this market. They can't take my money and move it to another property tomorrow like they could in a REIT. They can sell one property and buy the next. And as an investor in that REIT, I have no control. Um, so for that reason, I'm a huge fan of fractional real estate compared to REITs. I think there's certainly, if you don't want to do the work, if you don't want to be digging into every single property, I think there's certainly a place for REITs in the marketplace. But if you look at average returns over long periods of time, um, I've done much better in my life as an investor in individual properties than I have uh, as a, I have invested in REITs quite a bit over the years because I started off working in them originally. Um, but yeah, the big difference is I can look at this property and as a, with a pretty simple, evaluation, decide, is this a good deal for me or not? Where if you look at a REIT, really good luck figuring that out. I mean, you can look at what analysts say the net asset value is of that REIT. Um, but and the other thing too is, okay, I told you I'm buying about 2/3 of the properties that pop up on this site. Well, if I'm buying into a REIT, I'm buying everything they buy, right? And one of the things that really scared me about REITs is one of them that I worked for. It was we bought apartment properties. Most our average transaction was probably pretty close to $50 million. Like we bought really big, nice apartment properties in major cities. Um, we bought a deal. It was one of the first deals I was involved in that me as a new person, fresh out of grad school, was like, why are we doing this? The numbers are terrible. And I kept like bugging people about it. And finally, somebody was like, okay, we can't say this, but we need a good looking property for the cover of our annual report. That is the worst possible reason to buy a property. And that got lumped into our numbers for that year. And as far as I know, that deal actually lost money. Now, I haven't tracked it. I don't know what happened to it 10 years later. But yeah, I mean that's why I like being able to pick individual properties versus just having, there's a real pressure once you have a company, have these pools. Like the same thing is true for like investment funds as well. They have like this pressure to, you have employees, they have to buy stuff. No matter what's going on in the market, there's some need to buy. And so that just really I think that's my worry about that.
All right, great explanation, Josh said. Flavio also says, Joseph, for a person with no computer skills, how hard is it to invest on this platform?
So this one is pretty simple. I just noticed, did I stop sharing my screen somehow?
I just took it off for now. I can put it back on.
Yeah, let me actually go. Like I said, I'm going to actually buy a piece of this one. Let me show you how easy it is. Let's see. Like I said, the screen. Yeah, okay. I have a little delay, so you can see it now. Though I've got the page open
Yeah.
with the Invest Now button.
Mm-hmm. Yeah.
All right, so I click Invest Now. I'm just going to buy a little piece of this one. And you can do as little as $250 on here. I'm just gonna. So I just put that right. So I'm just on the website. You have to do your original KYC, which is like put your. I've put my bank info on here already. I think you guys are going to see my last four. I don't think that's too scary. So I don't know why I put 2,500. I put confirm and continue. So okay, the amount of my investment, the club. I do want to tell you about these clubs a little bit. I'll tell you about that as soon as this is done. And then pay with credits. So some of the credits on here come from rent, like so from the income I've earned from other properties. Some of them come from the club, like I think the $9.46 is probably from the club. And then they also do have referral fees, so some of it comes from that. But so it shows me, okay, uh, the amount I'm going to invest in it. There is this processing fee, this $3.99. This is what I was talking about. The only thing you could think of as a hidden fee, but it really is. I mean, I think this is a third-party processing fee that they're using. I've got my bank info.
So you're saying that some of that credit, like you're saying the rent, that is from other deals you're in?
Yep. Yeah.
That
So
okay.
it's accumulated in my account, and I get I could send that to me as cash, but I've just I'm just continually reinvesting it. I just hit this confirm and allocate button. And obviously it's going to say okay, it's going to take a long time because we're sitting here talking. Oh, look at that. Okay, and then I can open in dashboard if I want to. I don't think I want to share my whole portfolio on here. Or you can click on invest in more properties, and so now I'm a part owner in this. Now this deal hasn't closed yet, right? This is going to close next month, but now when it does, I'll be a part owner. And you know what? I don't mind. I'll show you my portfolio. It's just small right now. This is the one I have the least in. But you can see, some of these I've only bought $500 worth of. Some of them, I think my biggest one is only 5K. Um, so, but you can track all your performance on all these. But yeah, not like that. That's what I really like about this. And for most of these platforms, like I said, I'm really trying to experiment. Um, and I think, yeah, I mean, you can see my total. I think this is right. I think I've really only put $14,193.42, and my, right now it says my total portfolio is worth 15,559. Part of that is I get probably more referral fees than most people. I've referred quite a few people to the platform, and you get $50 when you do. Um, but I mean, it's not a huge portion of that. It's coming from rent, rents coming from the properties, rewards. Oh, that's what I wanted to show you, the clubs, right? So they have this club feature, and this is just something that they're doing for marketing. If you're going to be on Mogul anyway, it doesn't cost you anything to join a club. To become a full member of a club, you have to join it and then invite somebody else who also joins. But once you do that, depending on which club you join, uh, they pay out these extra rewards so that every time somebody invests in there, all the club members share in, up to 2% of the amount somebody invested gets spread out. And so that money's actually coming out of that 5% fee that Mogul's charging. So they're rebating up to 2% of that through this club program. And that's where some of my credits were coming from that as well. And then, in these clubs, like, so this is, I think it's okay for me to share this. I don't know. This is, it's set up sort of like, so we can come in and they have this community tab, and I'm just going to scroll that real quick so you don't see it all, because I don't want to, maybe people don't want to have their stuff
And
public,
so
but
who makes these? This is someone outside of the platform is creating their own club inside Mogul.
so this one that I joined is actually the club created by the two founders, but yeah, anybody can come in and create a club. Um, I've actually debated on whether or not I want to create a club of my own. So right now I just joined one that I thought was going to be, pretty active, but you can come in, you can create one, and then you invite other members, and then just you and those other members share in that 2%. Um, you can actually set it up to where you, as the club creator, get a higher share of that than the rest of the club. So one of the things that I'm trying to do is stay as neutral as possible when it comes to all of these platforms, because I really want to dig into, which ones are going to work well and which ones are not. And so the reason I haven't started a club is I'm trying to not make it so that I'm getting some benefits from the platforms because I'm a YouTube person talking about these things, right? um, versus what am I actually getting from just being an investor on the platform. So that's been my hesitation too. And I've had actually now a couple of different of the platform people talk to me about, like, hey, you should, like, these guys were like, why don't you start a club? And like some of the other platforms, trying to give me some sort of like little bit better of a deal because I'm, speaking publicly about this stuff regularly. But at least for now, until I've like picked like which platforms that, I'm not recommending any of these, right? I'm not endorsing any of them. And so I'm trying to stay neutral and not like get any additional financial benefit other than just from what I'm getting from the platform itself, right, through the investments. I know that might seem, I don't know, a little weird, but that's just how my brain works.
No, no. So Flavio has a few kind of questions, kind of about maybe property damage, repairs, lawsuits. So Flavio is asking, we'll kind of lump it into one. So he says, Joseph, in some property they require more money if needs big repair, like roofing. And then he goes into, in case of lawsuit against property from a tenant, do you get affected?
It's a good question. So these are all in individual LLCs. And so you get that, you have the protection that you normally would, from having an entity in an LLC versus your direct liability. Um, these guys are also very savvy about the insurance piece, and so they have, uh, in my mind, it's they have these deals, what I would call overinsured relative to whenever I've bought stuff myself, covering liability issues, and from that perspective. But then also too, remember they have a very large reserve baked into their numbers. Like this is a single family home. Let's let's look at this again, right? This is a single family home, and I think that, yeah, I mean they probably have like $60,000 in reserves that they've set aside. Um, what they basically do as far as reserves go, as far as I understand it, they reserve money for all the stuff that they expect to repair in the near term, and then they also set enough aside that if they didn't have a single dollar of income for the first year, they'd still be able to make the mortgage payments. um I don't know anybody that really does their reserves to that level. I know people that buy properties in real life, and they're like, "Oh, I've got 10K in reserves," right? I mean, and this is one single family home that you've got 60,000 set aside. So, one thing that obviously nerfs your returns a little bit, right? Like you're having these big reserves makes your cash on cash a little bit lower relative to what it would be otherwise. But I think that they're executing a really, what in my mind is a very, um, it's I think that they're taking their responsibility to investors seriously as far as making it a lower risk investment than, um, than they might be on some other platforms. So, for example, on Lofty, uh, probably half the properties I've invested in at some point have, and I've only been on there for 8 or 9 months. At some point, have had a big repair needed, and they do a capital call, and you can participate or not. And this is on Lofty. And if you don't participate, you get diluted. Or sometimes they do a debt capital call where like the other owners just lend to the entity. On here, I think it's because of the layers of insurance they're using, and they're in the way that they're evaluating properties up front and the large reserves. I mean, I think that the risk is very low of the property, um, of losing the property. And then beyond that, like we don't sign on the debt. If I, the most I'm going to lose is my investment in the property. Now, I say that, and the former attorney in me wants to give a million disclosures. There's always some risk that they can, pierce the corporate veil. You hear people talk about that and come after you as an individual. In my mind, that's such a remote possibility on a deal like this that I'm not really even thinking about it. Of course, it's something you want to dig into yourself if you're worried about it, and figure out, is that a risk that you're willing to take or not.
You're talking about, I guess, how does it, so what happens if there's a big expense that comes up now? So they,
Yeah, well, like I said, I mean, you have 60K in reserves, right?
okay.
Like, there's very few things that you're going to spend more than that on. And like, let's say there's a roof replacement coming up, that'll be something we'll bake into, that they would bake into their numbers when you buy this property. Now,
But so
um,
could they call like a capital call for to replenish that reserves?
that's interesting. I have to go back and look at the agreement, and that's one thing too. You want to really read through that. I'm sure that they could. I have to go back and read exactly how it works. I just don't, based on the holding period, and I just don't anticipate that being a very likely scenario. But yeah, I'm sure that there is some way that there has to be a capital call mechanism. It's not something I've spent a lot of time on because I honestly think that they're just so conservative with both their insurance and, um, reserves, that I think it's a very, in my mind, it's a very low likelihood event that they'd ever need a capital call, especially because of the level of yield that they're throwing off. Right? I mean,
Mhm.
there's so much income coming from these. I think it's more likely they rebuild a reserve by nerfing your cash on cash for a while. Um, I mean, obviously, if you have some giant sinkhole on your property that's, like if you have some uninsured major loss, I think there could be an issue. Um, and for me, that's the beauty of this platform, though. If I, they can't make you, participate in the capital call. Like that's not, you can get diluted away, or you can lose you can lose your investment in a property. But we haven't signed on the note, right? Like the notes, not, it's not recourse to us. And so, the way that I look at risk on these fractional deals is a lot more by having really broad diversification. So if something like that did happen to one of these and I lose that one, but okay, I've bought 10 or 11 properties on here already. Over the next 5 years, I'll probably have 50 or 100 properties. Um, in the event that something happens to one of them that is beyond all the things that they planned for, uh, I'll just lose that little piece. And because it's such a small piece of the portfolio overall, it should be easily swallowed up by the returns, provided everything else works out the way it looks to be at the moment.
Do you get a lot of like interaction with the management companies in these type of deals?
So we don't get to interact at all with the management company itself on the Mogul platform, right? The
Mm,
the Mogul company does that. Um, we get really good access to the people at Mogul, though. They do a
mm.
webinar every month where they will literally answer any question, and I've asked what I think are some tough questions on there, and they'll address them. You can schedule a call, like if once you sign up, you have like a person assigned to you. You can schedule a call anytime you want to talk to somebody there. In our Discord, we've got one of like their head of sales and marketing has actually joined our fractional real estate investors Discord. He's amazing. Like if we have questions, he's always in there answering questions. When this deal came up, there were a couple things that we couldn't figure out based on looking at old listings of the property and whatnot. And I mean, he answered it for us very quickly. Um, so yeah, they're very accessible, but they're the only ones that are actually interacting with the third party management companies that they hire.
Okay. Would you, I mean, but you get to see who's the third party, the management company. Would you say
Yeah,
like that would be a good way to maybe even you could test out, like if you're looking at, let's say, like what is this, Georgia, and you also want to know about a property management company maybe, and they're just so happen to be managing this one. That's a
right.
good way to see like how they operate and whatnot.
Yeah, absolutely. So and I actually think this is interesting. So for the pad splits, it's a little bit, they use pad split for their co-livings for their initial, but then they also have a third party manager providing some of the other management services. But like for their short-term rentals, there's another, somebody yesterday was just asking, like planning to book a stay at one of these. And I thought that is a fantastic opportunity to have, to do some due diligence on how they're run. So all the short-term rentals on here, I think that as our community grows, there's a really good chance we'll have people stopping in these properties on a somewhat regular basis. For the pad splits, it's certainly not the same because you're not going to have people just hanging out in their co-living, um, to see how it's going. But yeah, I mean, it's certainly digging into the manager for the properties could be helpful as well. Um, and over time, I mean, just you know, uh, and that's why, like, for all the fractional sites, I really would, if people, like, I know some people that got hurt real bad putting. There's one lady who I've talked to quite a bit, who basically put her whole retirement savings into Lofty at some point, which I think is the most reckless thing that I've ever heard. Right? Uh, like I've been doing this for 8 or 9 months, and I've been investing in real estate for 20 years, and I'm still taking a very measured approach. I'm experimenting with the platforms. I'm putting a little bit. I'm seeing how it performs. And so I think that's one of the easiest things that we can do as, part of our due diligence. It's weird to think of it as due diligence because you can't do it on properties in real life, right? Like I couldn't buy of $500 worth of a property to get an idea of how that's going to go. But on here, you can do that, and it's just such a different, you know, it's such a different benefit that we get that we don't get when you're buying whole properties, because like now I can see, okay, how are they doing with these ones? How are they doing with, they keep buying, there's a couple of markets where they continually find similar deals. And so like one of the reasons that I'm excited to buy this one is I've bought other pad splits of theirs, and not in Little Burn, but in in the greater Atlanta market, that are already doing perfectly fine. So they've sort of proven to me that they're going to pay me what, that they're going to be able to return what they say. Now, like I said in the beginning, I knew I was going to say way too many nice things about them, and it always makes me uncomfortable. So it's perfectly possible that all of these deals fall apart, right? Like that's why you want to dig into every single deal individually, and really understand on your own, like, hey, do their assumptions make sense as far as occupancy, as far as where the expense growth is going to be, all those sorts of things.
Yeah. So Flavia also has another question. So kind of based on this property that we're sharing on our screen, you says, when you look into property, do you care about the maintenance that requires monthly, like that house right now on the screen? Landscaping seems expensive.
Yeah. So all of those things are they're all important, and they're all things that they're putting into their assumptions, right? And so, yeah, it's certainly some, and you get to see, their repair and maintenance, and some of it they're doing as a sort of, am I on the wrong tab? It is confusing how they have two different tabs, but so you can see on all of them, what their management costs are, what they're assuming for different expenses. They don't really have where you can dig into the individual line items, like, what is that? They have mostly their miscellaneous cost is picking up most of what they are. So that's one thing though that you could certainly ask, and they will give you an answer to, like, hey, what are we paying for this lawn care, and where is that showing up in this pro forma? And but it's something that they're definitely taking into account when they're putting these numbers together. And yeah, every time I've asked about any of those things, like um, they've always had good answers, which is why over time I've come to trust them more and more on the small things, and I'm really just trying to check the bigger thing. So, for example, it's a $360,000 property. This property last year, they're in their trailing 12, the top line revenue was $62,000 in income, right? So their gross rents, $62,000 on $360,000 purchase price. Like they just are buying properties that have such good income relative to their prices that it's pretty easy to cover your repairs and maintenance, your lawn care, all your services. Um, they're thinking about those things when they're, that it should all be baked into your numbers, as long as what they're, as long as they're doing it the way they're supposed to be. And again, you can dig into any one of their things and ask them. And it is, sometimes it is like, you're just getting this one big line item, and this is covering, their lawn care and a lot of different stuff. But for the most part, anytime I've asked them directly, like, hey, what is this or that expense? They're able to, give me that answer. It's actually pretty fun. You should, if you're thinking about investing on here, you should definitely get on one of their webinars and ask the pointed questions, because Joey, the guy who is their head of acquisitions, he just knows these properties. Like, I very rarely given them a question and then their response, and I was like, that wasn't a great answer. It happened one time, but then they came back and researched it and gave me a much better answer the next time. So I think that or at least maybe they already knew, but like, just sort of gave a better response the second, with the follow up. But I think all of that stuff is being baked into it. It's not, and it's a good question, because like on Lofty, the repairs and maintenance stuff is almost completely ignored in their it is completely ignored in their projections, which is, completely reckless, right? But on this platform, they're treating it much different, and I think it really speaks to like the background of these guys as actual real estate investors. This is why I like this platform better. This platform is built by people with real estate experience. Almost every other platform is built by tech guys, and maybe they hired a real estate guy, but you can tell he doesn't really have much say there.
I like that. Okay. Yeah, I think part of it too is, everyone's always looking for some place to put money now. Even like
Yep.
the other day on Dion's Financial Talks channel, he had a investor on who was buying notes. And,
Yep.
it's just another way to get income, put your money, for that person. I believe they were older in life and they didn't want to be buying or, properties and dealing with the tenants in a sense. So they're investing in notes, and that was their strategy, and they're breaking that down. And I'm sure a lot of people are going to dig in deeper to that. And just like this, right? I think part of it is, and we didn't touch on it in the beginning, but maybe you can tell people like where you primarily invest in, and maybe because that market is getting kind of expensive and whatnot, so you're also looking for other places to put some money. So where currently are you investing and have your license?
Yeah, and it's funny that you mentioned the notes as well, because I don't know if you remember the first time I was ever on your channel, I was talking about my owner finance strategy. So I'm in San Antonio, Texas. Uh, my day job is I run a small real estate agent team who we only help investors find properties here. Um, I stopped. I over the last several years got rid of all of my investment properties and turned them into owner finance notes. So I sold the properties, held mortgages. I did this in large part because I don't talk about it a whole bunch, but I'm quasi disabled. My mobility is extremely limited compared to how it was when I used to when I got started in the business, and so I was trying to create a very passive experience. Making the owner finance notes it was a great way to do that. So almost my entire net worth is in mortgages that other people owe me payments from me selling a property to them and holding the notes. Um, if I had found fractional real estate earlier, I might have not have ever switched to that strategy, right? Because this is a way that we actually can get a lot. The one of the downsides to investing in mortgages is there you don't have any real tax benefits, right? You're getting paid interest income. Um, when you do it the way that I did it, where you're flipping the property with financing, then there's some benefit as far as like you're paying your capital gains is spread out over time. But in general, as a note investor, you're just getting interest, and so it's you don't have great tax advantages. So I actually think as mortgages pay off for me, like as people pay me off on balloon notes, I will move big chunks of money into this fractional space. Um, which is really why I'm experimenting with all these different platforms right now. I think, sometime over the next couple of years, I'll have some fairly large balloon payments paid off to me that I want to reinvest somewhere in continuing to be in a passive manner. And either I'll end up doing more notes and, more lending, or, flips with lending. But I think the more likely scenario is by then I'll have found some platforms that I'm really confident in and can put some real money to work on. And I feel I'm sorry. Sometimes I know there's all people are all at all different stages in life. So like I don't mean to say it's not real money if you're starting out and putting 250 or 1,000 or whatever it is on any of these platforms, right? I just mean I think sometime over the next couple of years I'll be comfortable putting a large percent of my net worth on some of these, and that's been my goal. Once I really started to realize um, that it is something you can do completely passively, and that you can get really broad diversification, and that there are platforms out there where you can get good deals, like deals that I'm very I'd be excited to buy most of these properties if they came up in my market, and so um, yeah, it's been a pleasant surprise that some of these exist, and then some of them are just a train wreck. So there's sorting through it all has been a lot of fun.
Well, that's hopefully what we can help people with, navigate the different platforms and then see what you like and what you don't like about certain ones. But something else you just brought up, I just thought of it now. And because I noticed, I know you also post on X, you take your son to buy the silver coins, I believe, or the silver once
Right.
a week, maybe. But just running through my head too, I think this might even be a good way for me to get my son, he's only 9, but even invested in something like this, and this, like a small amount, you can, evaluate the property, see the returns. But like you're saying too, it doesn't have to be a great entry point, a high entry point amount, and it's a great
Right.
way to maybe get his feet wet in real estate.
Yeah, absolutely. I mean, that's what I think. I spend a lot of time talking to and dealing with like new real estate investors, and I think like this is such an easy entrance for people, and the gives them the ability to learn so much. um it takes, I think, a lot of skill to dig up the types of deals that you can see on some of these platforms, and so being able to jump into them early and see like the real contrast between like one deal that's a fantastic has fantastic numbers versus another that doesn't, and oh, those two properties look pretty similar, like I think it's a great learning tool.
Yeah, absolutely. So, like I said, I put the Discord channel, the invite in the chat. So, if anyone wants to check out Joseph's Discord channel, a lot of great information, a lot of chatter going on there. And also, like I said, his YouTube channel, go subscribe because he probably puts out more daily content on the fractional real estate. On right now, our Fractional Fridays is kind of just, going over platforms, some early entry points, what thoughts, maybe what we don't like. But even me just learning about it and then how he's navigating it. But if you want more detailed stuff, I would say go check out his channel, subscribe. He puts out things probably daily now, right?
Yeah, pretty much every day. I did skip one day this week, and I think it's the first time I skipped in like over 100 days. So I'm trying to put out something every single day, whether it's just a property that I analyzed, a new platform that I found, some new little tip about how some of the platforms work. Um, I'm trying not to, even though I'm trying to put something out every day, trying to make it at least somewhat useful. At least it is in my mind. But yeah, I appreciate the plug though, Mark.
No,
And yeah,
I love it. I
yeah.
mean, like I said, Joseph's a new member in school, so if you are in school, also go give him a follow, go connect with him. He's a wealth of knowledge, and I'm glad he's joined the school community. And I know you touched on just quickly that you maybe your mobility is a little bit limited. Do you have see yourself being in Vegas in February for the ORAD event?
No, I don't travel at all. Because of that, I haven't taken a trip in forever. Um, I know that's and honestly, even when I was, you can't tell on here, but I am like a very extreme introvert, which sounds weird as a real estate agent, but I don't do well in networking events or conferences anyway. And so now the fact that I don't really travel anymore has sort of been a good excuse to not go to any of those. It is, it does. It always looks like a lot of fun, his events, and I really have been enjoying school a lot. The interaction, I just love talking about real estate so much that sometimes it gets me past sort of that introversion. But yeah, I think the chance of actually traveling out to that is pretty unlikely.
All right. Well, maybe we'll get you on stage. Maybe you can be the fractional real estate guy talking
Y-
on stage as a speaker.
If they put a couch on there, I would consider it.
Maybe okay. We'll wrap it up with Flavio's last question, maybe. So
Okay.
Flavio is asking, there I guess he's asking, are there some states where you would not buy fractional? I don't know. I guess maybe is there
So that's
some
a good.
states that you just stay away from?
Yeah, so that's one thing that's really strange about this is the fractional real estate has gotten me buying in markets that I never would have bought in. So I own a bunch of stuff, and I mean, you're not, this is going to hurt your feelings maybe because it's pretty close to. I I haven't bought anything in Pittsburgh, but I bought stuff in like a lot of the Rust Belt markets that I have always avoided. But it's because like on Lofty is where I bought most of them. I've been able to get such huge discounts to what I think the real world value is, that it's allowed me, and because I'm buying small pieces, it's allowed me to get comfortable with the risk of a shrinking population or maybe some like really egregious landlord tenant laws, at least in my, relative to what we have here in Texas and that sort of thing.
Right. Well, I think this was a great one. Like I said, this was a great covering of Mogul. Maybe we can cover another platform in 2 weeks or so. But like I said,
Yeah,
if you want
absolutely.
more daily, better breakdowns, probably more detailed breakdowns of um, properties that Joseph is looking at, go check out his YouTube channel. Go subscribe. I see him posting stuff daily. So yeah, awesome stuff, man. But I'll see you in school. It's always fun catching up. And maybe in about 2 weeks we'll be. Oh, you know what? Shoots. I got to check. I might be in Japan at the time, but we'll figure it out. Maybe we'll get one in before that.
Okay,
All
sounds
right.
good.
Thanks, Joseph.
Thanks.
All right.
Bye.
Bye.